Welcome back to Inside the Markets from GMS Podcasts, where every week we take a closer look at ship recycling, pricing shifts, and what is really happening on the beaches. This week, the word is tension. Currencies are wobbling, steel prices are jumping around, and supply is still frustratingly thin. But while owners in Asia hesitate, Dubai sits at the crossroads of tanker trading and ship disposal, making it the perfect vantage point for this moment. Joining me today is Simos, head of Dubai Office. Simos works directly with mainly Middle Eastern, European owners, cash buyers, and brokers, so he has a sharp view of how oil, freight, and recycling come together here. Simos, welcome to the podcast.
Thanks, Jamie. It is great to join and share what we are seeing from Dubai.
Let's start broad. What is the overall sentiment in the recycling markets right now?
It feels heavy. India is struggling with the rupee sliding into the 88s to the dollar and new tariffs hurting exporters. The steel prices also dropped region $3 to $5 in the last couple of days. Bangladesh is flatlined with no new arrivals and still collapsing to about $519 per ton. Pakistan is the only one holding its ground with prices climbing to 625 in a stable currency. So on paper, Pakistan looks strongest and the most stable, but volumes are thin everywhere. Owners are simply not letting ships go unless they have no other choice.
From Dubai, tankers are always close to the conversation. How is freight affecting recycling supply, especially for tankers?
That is the key story. Bulkers across the board, with Capes being the strongest, are still earning, so bulkers are staying in the water. Tankers, though, are where eyes are turning. We are seeing older crude and product carriers in the Middle East reaching the end of their trading window, and those are the most likely to head for recycling in the near future. Freight is still giving owners breathing room, but the pressure is building on older tankers.
Let us touch quickly on the three big markets. Start with Bangladesh.
Well, Bangladesh has gone silent. Not a single fresh arrival this week. Plate prices dropped sharply, sliding from about $550 per ton a couple months ago down to $519. Political focus is already on elections next year around February 2026, so no one is looking after recycling. Another main issue is that most local rolling mills have shut down due to the very limited demand for steel. The interim government is not taking up any projects right now. Active yards have shrunk to only 21 compared to 35 in the past, and even with 18 HKC approvals, the market is very much paralyzed.
And what about India?
India is doing its roller coaster up and down, but there's some downward pressure mounting up. The rupee is at record lows, tariffs are hitting exports, and there's a high risk of sanctions. Steel prices have held steady at about the 430 mark, but the currency devaluation is creating a bit of concern. Activity is minimal, with a couple LNGs and a couple of bulkers and a woodship carrier arriving in the last couple of weeks. India still has the biggest compliance advantage, however, with more than 100 HKC yards, but there's still some pressure due to the aforementioned.
Pakistan seems to be the standout.
Well, Pakistan is fairly steady. No arrivals this week either, but local steel prices actually ticked up slightly, moving from around $622 per ton to about $625. So there's some stability there. The rupee stayed steady at 283 against the dollar, which gives buyers some confidence. On top of that, the government has just approved a 12 billion rupee program to turn Gadani into a model green yard cluster by 2026. If they manage to deliver on that, it could heat up the market there.
And what about owners you are speaking with in Dubai? What is on their minds?
Most of them are tanker focused. They know that the older units are nearing their end and they want to time disposals carefully. Most owners tend to have specific trades for the vessels, which they will juice to the maximum. Owners here are also creative, so they're asking about forward deliveries, leasebacks, and ways to unlock value while keeping ships trading. Dubai is a hub for structuring these deals, so that is a lot of our day-to-day discussions.
Since the Hong Kong Convention came into force, how has it shifted the deal flow you see from Dubai?
Well, it has added a lot of paperwork, but it has also added clarity. Every deal now starts with IHMs, recycling plans, and full yard checks. That is healthy. It slows the pace, but reduces the risk, which owners appreciate.
Okay, looking ahead, what do you expect over the next month or two?
Very vintage, smaller general cargo ships and smaller bulkers, handy-sized to Panamax bulkers, will be the dominant candidates, perhaps with tankers to follow in the near future. India will remain the compliance destination, but under pressure from its weak currency, with Pakistan competing for at least in the larger sizes, Panamax size, 10,000 lightweight and above. Bangladesh will remain sidelined until after the elections, I reckon. And we need to keep in mind India's biggest risk will be the currency volatility.
Let us end with a quick forecast. Simos, short answers only. What ship type do you expect to see recycled next month?
Older, smaller to Panamax bulkers, and maybe tankers will follow in the near future.
And if an owner asked you today, where would you tell them to sell?
I would tell them to sell into India for compliance and perhaps also into Pakistan, depending on the vessel size and type.
Do you see Bangladesh recovering soon?
I don't see it recovering this year, maybe early next year, not before elections in early 2026.
Biggest risk to watch right now?
Risk will be the currencies,
And one ship type Middle Eastern owners are watching most closely?
definitely tankers.
That brings us to the end of our Dubai special. We have heard how freight is keeping supply thin, how tankers may be the next wave of candidates, why India is pressured but still trusted, why Pakistan is holding firm, and why Bangladesh remains sidelined. My thanks to Simos for his insights from Dubai and for helping us see how currency, compliance, vessel profile, and local government factors are shaping today's recycling market. Inside the Markets will be back next week with more updates from our GMS country heads. Follow GMS Podcasts on Spotify, Apple Podcasts, or YouTube, and connect with us on LinkedIn for the latest ship recycling intelligence. Until next time, stay informed, stay compliant, and stay ahead.